Trump's decision to hike tariffs on imports of Indian goods to the US from 25% to 50% hurt sentiment, with investors hoping for an early resolution of the differences. Metals, auto and energy are the big drags.
Eternal sees large block trades of over 5,600 crore rupees, with Antfin likely to be a key seller exiting its stake in the company, while Kotak Mahindra Bank also sees a prominent investor selling shares worth over 2,000 crore rupees via block deals.
Exporters across sectors like textiles, engineering and gems and jewelry point to a standstill on exports after US announces a 25% additional tariff. Some even see order cancellations and fear a shift of orders to other nations. All hope for a speedy resolution of India's differences with America.
The sources tell CNBC TV18 that India is looking to use the 21-day window before the additional 25% tariff kicks in to try and negotiate a solution. This even as the Prime Minister states that India will not succumb to pressure and compromise the interest of its farmers following Donald Trump raising India's tariffs to 50%.
Bajaj Auto MD Rajiv Bajaj sees exports scaling back to its earlier peak of 2 lakh units a month soon. He also expects use of low rare earth magnets helping it meet the year's target for EVs. A slew of launches, including the new Pulsar and its e-rickshaw Ricky, will only add to the mix.
Good afternoon, you're watching Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Hormuz Fatakia. With me, as always, is Vamakshi Doria. Vamakshi, good afternoon. The penultimate day of the week, the weekly options expiry as well. When the market started off a little resilient, but still seeing some bit of selling pressure today, but not as much as what was feared.
Well, absolutely, Hormuz. Given the kind of headlines that we saw last night, one would have expected a much bigger fall. But for now, definitely the index is trading close to the day's lowest point. The Nifty for now is trading with a cut of almost 140 points. But nevertheless, the mid-cap end of the market is the one that is taking the, is bearing the brunt of all the action. The mid-cap index is down almost 0.9%. The small-cap index will also come up for you on the screen, and that will also indicate how the broader market is doing. It's down almost 0.8%. Apart from that, we'll take a look at NSDL. This stock listed yesterday. It saw good listing in yesterday's trading session. Today, again, that stock is up almost 9%. The other stock, is PVR Inox. It's up almost 2.3%. Lots of stocks reacting to numbers. Take a look at VIP Clothing. That stock is now at around 40 rupees per share, up almost 4%. But there are more stocks that are actually reacting to the numbers on the negative side, because we have names like Prince Pipes, which is down almost 9%. Lumax also down 8.5%. GNFC again down almost 8%, Hormaz.
Well, what a move on NSDL. It was a strong start yesterday, and with that move today, the stock is now up almost 40% from its IPO price of 800 rupees, and from there now they're at 1100 rupees. So a very strong move that NSDL has seen in the first 2 days of its trading journey. We just came out with some smaller pharma companies coming out with results. Lincoln Pharma is one of them. That reported numbers, and the stock had seen a bit of a spike after the results announcement. That stock was up 4%. There you can see Lincoln Pharma. Now it's up 8%. So a very sharp move seen on that stock. The other one that came out with numbers was Kaplan Point, and that too reported results just a few minutes ago. So a lot of these smaller pharma names seeing reactions to their earnings. Kaplan Point briefly moved into the green, but is currently trading around the flat line after a recovery of almost 40 odd rupees from the lows of the day. And the other one that came out with numbers recently was Prism Johnson, and that too, of course, not a drug maker, but has various business interests in the southern part of the country, and that saw a sharp spike and now is cooling off from those post-earnings highs. But the big story today, US President Donald Trump singled out India in his tariff war, slapping an additional 25% tariff on all Indian goods, penalizing India for its continued purchase of Russian oil. Now, the new tariffs, which take effect from the 27th of August, brings the total US tariff burden on India to a staggering 50%. Now, this move comes after Trump, in an interview to CNBC said, and I quote, "They are fueling the war machine, and if they are going to do that, then I'm not going to be happy," end of quote. Now, the White House also said that the order could be revised if India takes measures to align sufficiently with the US. And in another instance, the order could be revised if India retaliates. Now remember, Donald Trump has upped the ante in his trade war with India, slapping unilateral tariffs after months of stalled talks. The US president accused New Delhi of blocking market access for American goods and took aim at India's growing alignment with the BRICS bloc. India, in turn, has called Trump's threats unfair and unreasonable, setting the stage for a fresh showdown in the global trade diplomacy.
Well, Hormaz, on that note, let's actually listen in to what Prime Minister Modi had to say in reaction to Trump's tariffs.
हमारे लिए अपने किसानों का हित सर्वोच्च प्राथमिकता है। भारत अपने किसानों के, पशुपालकों के और मछुआरे भाई बहनों के हितों के साथ कभी भी समझौता नहीं करेगा। और मैं जानता हूं व्यक्तिगत रूप से मुझे बहुत बड़ी कीमत चुकानी पड़ेगी, लेकिन मैं इसके लिए तैयार हूं। मेरे देश के किसानों के लिए, मेरे देश के मछुआरों के लिए, मेरे देश के पशुपालकों के लिए आज भारत तैयार है।
Now, with Donald Trump doubling the tariffs on India to 50%, are further negotiations still on the cards? Parikshit is joining us to tell us more on that. Parikshit, what are your sources telling you?
CNBC TV18 has learned from sources that while India considers the imposition of penalty to be unfortunate, the focus will now shift to negotiations and back-channel talks to find a way out. The actual date of imposition of this penalty is after 21 days, and sources say this is being seen as giving space to negotiations to find a way around the additional tariffs. India will try to negotiate a solution in the next 21 days within the larger ambit of the bilateral trade agreement. India hopes to work towards finding a solution which is a mutual win-win for both sides. Sources adding that it is important to take a long-term view of the larger India-US partnership which has been built over decades. Also, the purchase of Russian crude is not being seen as the only reason by India for US to impose this additional tariff. This is because China too is a big buyer of Russian crude. This is being seen as a negotiating tactic to put pressure on India in the trade talks. When it comes to crude purchases, Indian oil PSUs have been purchasing crude oil from all over the world, and they are guided by the best market prices. Oil imports from the US have significantly gone up in the last 6 months and are up by approximately 114 to 120% this fiscal. Indian PSUs are buying oil and gas from the US companies and will continue to increase purchases. So India will look at ways to resolve the situation, keeping in mind that India shares a very close linkage with the US industry and businesses.
Well, earlier on, we also spoke to a handful of experts on the impact of Trump's tariff and the road ahead. Let's listen in to excerpts from all of those conversations.
So if India put out a statement along with a deal that we are grateful for to President Trump for all the help he's given us, including in the India-Pakistan war, they can put in a way that is acceptable. But, you know, Trump feels like Pakistan recommended him for the Nobel Peace Prize and acknowledged his help, and India is not. And I am sure it is a factor. How big a factor? I mean, the other things like big numbers that he can boast about, but it'll soothe the ego. So there's definitely an ego component to everything that Trump does.
Very surprised, as I said. I follow RFK Jr. very closely. I think they're doing a lot of reforms in the US, specifically when it comes to big pharma. And if I look at the agenda seems to be to bring, the healthcare costs down. I find it strange that it's not like you can replace generic, pharma from India to some other country, because it takes a lot of time, FDA approval. There is a host of things that is to be done. Okay. So we don't think the tariff is coming, but even if it comes...
It's been an overhang for a while.
Yeah, but I'm just saying, even if it comes, there is no replacement for that. So these drugs will go to the US, eventually the consumer will have to pay. Nobody has that much of margins in India.
We also believe that finally, it's a question of negotiations, diplomacy, a lot of politics rather than only economics built in. And hopefully things will settle now. Because I would agree that 80-85% of the concerns which we have seen over the last 1 year seems to be behind us. In terms of geopolitics, world is a little bit more peaceful than it was. India, Pakistan, and the Middle East scenario, I think, except Russia, Ukraine, which continue to fight, most of the places are pretty, I would say, stable. The world is starting to grow a little bit, except this tariff issue. And even in India, you have liquidity in our favor. There's been a huge surge. Profits are slow, but they are recovering.
Market experts on the recent turn of events. By the way, the mid-cap index has now slipped to the lows of the day, 1% lower now on that index. We also spoke to the management of Pearl Global, which is set to be impacted by Donald Trump's tariffs. Listen to what the management had to say here.
They want our US part of the business to be moved out to Bangladesh, Indonesia, and Vietnam, where we have our facilities. And I think that would be I would say, a death knell for at least for this particular season, which is coming up for the Indian industry, because 50% tariff, most of the retailers won't be able to absorb or have any mitigation.
Well, CNBC TV18 Sanjay Suri also spoke to former US Assistant Secretary of Commerce Raymond Vickery on Trump's proposed tariffs. Let's listen into that conversation.
The whole Trump tariff effort is unreasonable and unjustified. It's a huge, huge mistake for President Trump and his administration to combine the question of trade with Russia about oil with the question of overall tariffs. There are verities and issues and factors which are very, very different in terms of what Trump may view as a trade deficit and what is going on with Russia and Ukraine. And to throw those all into the same basket and come out with a 50% tariff is egregious and unreasonable.
Let's also get you some more highlights from the White House. Donald Trump said that there is a good chance of a meeting with Russian leaders and Ukrainian leaders as well, following what he described as very good talks between his envoy and Vladimir Putin. Now, this comes ahead of Trump's deadline for Russia to agree to a ceasefire in Ukraine or face new sanctions. Here's what he had to say.
Well, there's a very good prospect that they will. And we haven't determined where, but we had some very good talks with President Putin today. And there's a very good chance that we could be ending the round, ending the end of that road. That road was long and continues to be long, but there's a good chance that there will be a meeting very soon.
Well, on that note, let's slip into a very short break. But as we do that, here's a reminder for our viewers. Unlock a world of exclusivity, expertise and influence. Become a member of CNBC TV18 Access, a premium members-only experience on cnbctv18.com. The membership includes access to CNBC TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits. Welcome back. Thanks for staying tuned into Business Lunch. Moving on, Reliance Industries Chairman Mukesh Ambani, in his message to shareholders in the FY25 annual report, says the company is reshaping to become a new age deep tech enterprise. He points to over 1,000 scientists working on cutting edge research in AI, renewables, advanced materials, and digital platforms. He highlights the transition from vision to execution on the giga-scale solar and battery energy projects, and while he sees O2C and oil and gas businesses continuing to cater to India's growing demand, the focus is on building platforms to empower people and elevate India's position in the global economy.
On to a CNBC TV18 exclusive then. Bajaj Auto MD Rajiv Bajaj sees exports scaling back to its earlier peak of 2 lakh units a month soon. He also expects the use of low rare earth magnets to help meet the year's target for electric vehicles, adding that a slew of launches including the new Pulsar and its e-rickshaw Ricky will soon be launched. Listen in.
Post-COVID, once our export markets started recovering, particularly in Africa and LATAM, exports came back to a level of about 140,000 a month compared to about 200,000 a month pre-COVID. And as you may have seen, in recent months, they have come now nicely to a level of 180,000 a month. With an all-round secular recovery, and particularly so in LATAM, which we are very happy about because, again, with Pulsars and Dominars, it's a very rewarding market for us. And I'm actually quite hopeful that, if this trend continues, it may not be long before we are back to that level of 200,000 a month. The immediate solution that seems to be working for us now is to get low rare earth, or LRE as it is called, magnets from China. That has started up. The next step would be to try and source LRE from elsewhere, because what if China bans LRE tomorrow? Then you're back to square one. The availability of LRE. We are now looking at least a 50% availability as far as the Chetak is concerned in this month, in August, and perhaps about 70% as far as the GoGo is concerned. I will actually say that we think we can now do better than we had even planned for the whole year, because by October, production should completely normalize. We should have made up for what we will lose, what we have lost in July and what we will lose in August. We are starting production as we speak. I believe we will go to market in the first 4 markets on 10th of August under the brand Ricky, R-I-K-I. So that's going to be our brand for the e-rickshaw segment. As far as motorcycles are concerned, this is not something that we have talked about so far, but I'm happy to share first information on this, that this is a segment where, it's a bit between the Chetak and the three-wheeler. It's not that we are not in the ICE motorcycle, but we are not exactly the market leader or overwhelmingly the market leader. So what we're going to do here is, I think we're going to work with 2 of our strongest brands, the Boxer in export markets and the Pulsar, the world over, quite frankly, is a very, very strong brand. We're going to work with these 2 brands, and hopefully in the near future, we'll have something on that front, i.e. on the electric motorcycle as well.
Well, that was the management of Bajaj Auto. But before we slip into a short break, take a look at the Nifty. It has slipped below the 24,400 mark for the second time today. Keep in mind that this is the lowest level we've been at since May 12. And in fact, we're only 250 points away from the low that we made during Operation Sindoor. So an important, development out there. The Nifty for now is trading with a cut of almost somewhere around 200 points. But slip into a short break for now. We'll get you more news and updates on the other side.
At the lowest point of the day is the index, the expiry session now taking full toll on the markets. We've broken below the May 12th low of 24,378 as well, and now a cut of 215 points and counting on the Nifty. Axis Bank has seen a sharp fall from the highs. Mahindra and Mahindra has seen a sharp fall from the highs. Take a look at that. Take a look at Axis Bank. Take a look at Mahindra and Mahindra. Take a look at Trent, and that too has taken a sharp knock from the higher levels there, and the sharp fall in Trent as well, 2% lower on that stock. But of course, can't not pull up the contributors as well, and that will give you an idea of who are the principal culprits in taking the index lower. It is ICICI Bank, it is Reliance Industries, it is Infosys, it is Bharti Airtel, and it is SBI. Of course, remember, SBI is reporting results tomorrow. So there you can see the contributors. There are 40 points on the downside coming from Reliance, 21 from ICICI Bank, and some minor gains for HDFC Bank and for Hero MotoCorp. I'll get you more on the markets as the day goes by. But what could be a major relief for power distribution companies in the capital? The Supreme Court has directed for the liquidation of regulatory assets, potentially paving the way for price hikes. Ashmit is here to tell us more on that. Ashmit.
Well, a landmark judgment coming in from the Supreme Court to have sweeping impact across a trifecta of stakeholders. That's the DISCOMs, the consumers, as well as the state governments. For Delhi DISCOMs, a big win for them, a 27,000 crore rupee win for them. And for consumers, they could potentially be looking at, after the Supreme Court judgment, crawling up power tariffs or a bigger subsidy bill for the state governments. So this entire issue began with the Delhi DISCOMs raising the issue of regulatory assets in the Supreme Court. Regulatory assets, roughly speaking, loosely speaking, the difference between the cost of procuring the power and the realization from the customers. There's been a shortfall over the last very many years. These regulatory assets have added up to over 27,000 crore rupees in the books of these Delhi DISCOMs, and that is the issue that was raised before the Supreme Court. Now, the court came down very heavily on these regulatory assets, calling it a case of regulatory failure. Strong language being used there. And to that end, the Supreme Court directing that these power tariffs that are charged to the end consumers, such as you and I, needs to be cost reflective. So this is the guidance that has come from the Supreme Court. But importantly, the direction that has come is for liquidation of these regulatory assets. That needs to be done within a 4-year period. The clear mandate that has been given by the Supreme Court to the state regulatory commissions, they need to come out with a roadmap to liquidate these assets, regulatory assets, within a 4-year period. Now, how is liquidation done? Well, it is usually done by either increasing the power tariffs charged to consumers or by allowing the state government to foot a larger subsidy bill. One of two options needs to be considered, if not others. But broadly, that's the takeaway that the Supreme Court has given. Regulatory assets, that policy needs to be done away with. Only in exceptional circumstances it can be allowed. And then the ones that have accumulated so far needs to be liquidated. So for the DISCOMs, a big win coming in for them. For consumers, they could potentially be looking at increased power rates. And as far as the state governments, they could potentially be looking at bigger subsidy bills. Back to you.
Well, thank you so much for that update, Ashmit. But with that, it's a wrap on this edition of Business Lunch. It's a red-looking screen. Don't go anywhere. Midcap Radar comes up next.